What is happening, everybody? It's your boys. He's Steve Strazza. I'm Sean McLaughlin. Steve Strazza is coming to you live from the Florida Keys. I'm coming to you live from Boulder, Colorado. Not that any of you care, but just throwing that out there. We're spread out around the universe, the entire All-Star Charts team. Seriously, spread out around the world. We've got guys in Australia, New Zealand, Europe, Venezuela, San Diego. Is that another country?
Fully remote, long before COVID.
We were so far ahead of the curve. People are trying to be like us. I mean, that's really what it comes down to. Oh. So that, and I'm bringing all that up because Strazza and I get to do these little fun things online. We get to talk online, and that's all cool. But next week we get to hang together. I get to give him a real high five. We're going to be in New York City. Me, JC, Strazza, some of the other guys from the team. We're going to be hanging out with some of our customers, hanging out with friends. It's just going to be a great time. So, Strazza, I'm looking forward to it.
I can't wait to see it, man. Can't wait to see everybody. And all of our listeners and viewers and clients are probably so sick of and tired of hearing about this by now, because every show I've done this week, every Spaces, I'm like, hey, CMT, am I going to see you next week? So, sorry, everybody, but we're all very excited. Personally, it's my favorite conference of the year. So I look forward to this all year. I can't wait. And back in New York, oh, so good. So good.
And, oh, sure, of course. Yeah. Sorry, that's the voice of God coming in. I don't know if you guys heard that. That's our video guy, Izzy. Shout out to Izzy telling me that I'm not sharing my screen. So now I'm sharing my screen for you. All right, we had a little technical glitch coming in. My video wasn't working right, and so now we're a little out of sync. But hey, you don't care about that. Let's talk turkey. Let's talk stocks. Let's talk options. This is the Flow Show where we dig into unusual options activity to see if that will lead us down a path into some interesting trades that we might want to put on. So Strazza, why don't you take over here and tell me, what are you seeing in this week's Follow the Flow report?
So let's take it from the top and just talk about some interesting names, and we could take this in any which direction you'd like. So Occidental, got to call that out. Oxy back on our list. What else is new? Just from
we've been talking about Oxy for a year, I feel like.
Yeah. From a price action perspective, continues to hold where we need it to, where we want it to. It's like that $60 level. So I don't want to go there today, but just an observation. Back on the list with more bullish flow. Then it's really like it's that cyclical theme, right? This commodity stock theme at the top of this list here. Freeport-McMoRan, that's a big one. That's just a simple way to play materials, like a very popular vehicle, right? To play metals and mining stocks. Back to Gold, or B2 Gold Corp, BTG.
I'm familiar with that one.
Yep. I think we should talk about that one. And then do you remember from last year this Sibanye Stillwater?
I do remember it. I just remember it stands out because it's got an interesting name, Sibanye. I remember we were all trying to figure out, are we pronouncing it right?
It's an international one. They're a big mining conglomerate. Remember, we were trying to play this base breakout, and this is why you wait for the breakout, you wait for the confirmation. I just had to bring the chart along. We were trying to buy this, at the upper bounds. I don't know if it was the first time or the second time we were up here at this like 21 level. Failed. I mean, this thing's been more than cut in half since, right? So base not ready, stay away. I wouldn't really touch this one. I do like Back to Gold though. And another one that stood out, just to one more interesting one. Look at this bearish flow in M&T Bank Corporation. They had earnings yesterday. Yeah, they had earnings just yesterday and really knocked it out of the park. It was a great report. Stock's up like 8.5% this week. So maybe whoever bought those options is already regretting it.
M&T Bank. Fun fact, Strazza. The very first bank when I was 5 years old had my very first savings account.
Oh, yeah? So they're my bank currently. Fun story, because I had a community bank in Connecticut and they recently purchased them. So now like I've become an M&T customer.
Not only was M&T my first bank, but I had a passbook savings account. I don't even know if they do those things anymore.
I don't even know what that is. I've just
It's
heard.
basically it's a little book. It looks like a passport book, right? And whenever you go and you make a deposit, they would I think they would stamp the deposit into your passbook or what they call it, passbook savings account is what they called it. So they would have a stamp that had the date and the amount that you put in. Boom, stamp right in your book. It was like a cool little. I mean, if I had it now, it'd be a cool collector's item. I don't know where it is. I'm sure I lost it.
So that was the blockchain before blockchain.
Yeah, exactly.
Um, last thing that kind of stands out is this old legacy tech theme. Like we've talked about, you've put some trades on. I know you were all gung ho about the Motorola last week. Dell and Hewlett Packard, right? So those are two oldies but goodies. These stocks are coming back. It's like that value tech, that legacy tech play. I like that base in Dell. Big move today. Screaming higher, must have beat earnings or something.
That is a good looking base. I don't think they've announced their earnings yet. Let me get a quick earnings date check here. We're looking at
late May.
Yeah, late May. All right, we don't need to be afraid. We could wade in on something like this. Just do a longer term trade. What I do like, in addition to the base, this is the options trader to me talking, but I like how this implied volatility is, it's come up a little bit in the last week, but still near its lows for the year. That means options are cheap. That means if we wanted to play it with just straight long calls, we could. Yeah. Just kind of opens up a lot of possibilities. But I like this one. I feel like buying it right now, we'd be chasing it today a little bit.
Yeah, it's got to be overbought here, right? Yeah, it's RSI 77.
But it depends on your time frame too, right? Like if I wanted to play this, and this is actually a good discussion to have real quick. Like generally, the trader in me doesn't like to chase, right? That's just the trader in me. However, if I liked this trade and I liked it for, let's say, the next 6 months, and I wanted a position in, let's say, end of the year options, so like December options or January options, right? Do I really care if I'm buying $1 higher than where I'd like to buy it right now? No, probably not. It's not going to be that big of a deal. The fact that volatility is low, implied volatility is low, means I'll be getting a good deal on the price of the options, whatever I buy. And the duration that I have in the trade will more than make up for any suboptimal entry that I might get today. Am I making sense, Straza?
Yeah. Why do you think volatility is so dead in this, though, as it's screaming higher?
Well, I had this up on my screen when we started. Look at the VIX. The VIX is at levels we haven't seen in over a year. We're into the mid 16s now. Let me pull up a weekly chart. It's been a long time since VIX has been there. It's been, what was this? End of 2011 isn't the last time or 2021, excuse me. The end of 2021 is the last time we saw a VIX this low. So look, volatility across the board is coming down. So I'm not surprised that the Dell options are cheap.
Let's talk about VIX TA quick, right? So
sure.
You often get poked fun at if you start drawing trend lines on the VIX, right? I've done it, but it's not
guilty.
Really about that. You talk about the VIX almost every week. And whenever you're talking about it, you're talking about it in a range. On the upper bounds, the VIX goes to here. On the lower bounds, it goes to here. When the VIX establishes a new range, right, and violates that old range, it tends to be inflection point or turning point stuff. And you just mentioned, last time VIX was down here, December 21. What happened in December or January of 22? Stocks peaked, right? And the bear market began at the index level, at least. VIX established a new higher range. So maybe if it's establishing a new lower range now, hitting these multi-year lows, that's telling us maybe we're at some sort of turning point. The bottom is in, entering a new markup phase. Am I sounding crazy? Too bullish? You like it?
No, that's great. And I'll just add that the way I think of VIX when I look at it is, I don't care about the actual number. Like, it's fun to talk about that it's got a 16 handle for the first time in over a year, but I don't really care about the number of the VIX. What I do care about is the trend. Like, is it trending lower or is it trending higher? That's valuable information to me. And that's really all I care about. And right now, the trend is undeniably lower. We're looking at weekly candles here. We've got 1, 2, 3, 4, 5. We're working on our 5th weekly candle lower to new low levels we haven't seen in a long time. So that tells me that people are, at the very least, it's telling me that that whole Silicon Valley Bank thing is already in the rear view mirror, which is kind of astonishing when you think about how freaked out everybody was about 6 weeks ago. It feels like it's in the rear view mirror. Am I wrong?
Crazy to think, but the VIX didn't even move much when it was all happening. You even go back to March. Like, sure, we got a little spike there early to mid-March, but it didn't even take out the highs from last fall. So strange. These bank earnings are coming in good, though. It's been good. So far, so good. Here's the thing. Even the ones that aren't great, the stocks aren't resolving lower from these continuation patterns. Even the reports that are not the best, the price action's pretty solid.
And I think that's what market participants are signaling that they needed to see. They're seeing that the banks are not scaring the pants off everybody. All right, so let's chill out. And it's being reflected when you see things like the VIX. You're seeing implied volatilities generally, not on every stock and not in every situation, but generally across the market, you're seeing implied volatilities coming in. There's less fear in the market. That's a good thing.
And don't get me wrong, right? Like when you're paying attention to earnings and trying to analyze the reactions to earnings, it's all about the expectations, right? So look at how the prices react. These reports were by no means great, right? But expectations came down enough and prices came down enough in March, right? They repriced these stocks in March. A lot of them fell 30, 40, 50%. First Republic down like 75, 80%, right? So the whole securities were repriced. Now the earnings reports come out. They were bad, but maybe not as bad. Stocks are moving higher. For now, it's not a bad thing. Also, guys, just quick announcement. I am monitoring the YouTube chat. I see De La Riva. Hey, guys. So any questions, send them in. Let us know what you want us to talk about. I mean, Sean, where do we go?
All right. Well, look, we got a little off track there. We were talking about Dell for a second. we took a little volatility detour. Let's get back to Dell real quick just to finish our thought on this. I do like this base that you were talking about here. Let's look at the options chain. If we want to go a little longer term, to do two things. Number one, takes the impending earnings that are a little bit more than a month away, kind of minimizes the impact of our trade. And two, make us feel a little bit better about not chasing something. But if we go further out in time, let's say October, okay? We're not going to go crazy far out, but we'll go 6 months out, half a year. The 50 strike calls are trading at, you can get them for about $2, $2.10 if you pay the offer. How do you feel about that? That's $7 higher than current prices.
I mean, that's easy. That's what, 15% move from here?
Absolutely. Yeah. You feel like that's I mean, what that would mean is that would be a yearly high according to my chart. I don't know if that's an all-time high. Let me look. No, definitely not an all-time high. All-timer is at 61 and change. But
no,
if we get
right, because this is a reversal pattern. It looks like it's completed. We should get a leg up. If we have until October, we're giving ourselves a whole 6 months. Need like a 15, 20% move to make money on this one. I think those are priced pretty cheap.
I like it. And you know what? One thing we haven't mentioned, or maybe you did and I missed it, but this also is a stock in the software space, which is if you're bullish and you think this market broader term has legs and the indexes are going higher, it's going to be led by software. Software is going to be one of the leaders. Maybe not the leader, but it's going to be one of them.
Dell is technically hardware though, but that's
are they? I thought they shifted. They pivoted into software.
HP did.
Oh, my bad. Shows what I know.
Maybe they do a lot of hardware.
Okay. All right.
But
what else you got?
It's just tech stuff. I like gold. If you want to talk about gold, let's talk about gold. Let's do that.
Let's talk about gold. What do you got? I got the GLD ETF up right now. So, any individual names you like there?
Yeah, let's talk about BTG and let's talk about why first. Like gold heading back to those all-time highs, depending on how you cut it. If you're looking at a weekly chart or a monthly chart, maybe already made new all-time closing highs. Even as importantly is this chart of the gold miners here. I got GDX up. 31 has been our level for GDX for 3 or 4 years now. We've been talking about 31. It's a 2016 highs there. We cut below them when we were selling off last year. Now back above that level, back in the box. Think a new uptrend is underway and everything's really working. Like we're getting the outperformance. Here's the relative chart. I brought brought along a couple. This is GDX SPY coming off very logical support zone, making new multi-month highs. Looks good. Looks like it's ready for future leadership. And then the market internals. This is the 30 Philadelphia gold and silver miners in the index XAU. And we're just looking at here, like, are we above or below the moving average? 5-day, 10-day, 20, all the way over to 200, 250. It's a sea of green, right? All of these stocks are working. So really, really strong participation beneath the surface. And then last but not least, you got the risk appetite, right? Silver's outperforming gold. Animal spirits are alive and well in the space. So we want to be looking for opportunities here. BTG, look at this, very clearly defined at those highs from, over a decade ago, 2011, 2012, it looks like. Call it 450, hook higher. I think the squeeze is on. This one runs to $7.
Well, our good friend JC likes to joke about how when he's getting bullish on gold, he feels like the best way to play it. And he doesn't recommend this for clients, of course, but privately for himself, he's like, when I get bullish gold, I just want to buy the shittiest, smallest small cap I can find because I'll get the most juice there. So with that in mind, is BTG one of those with, I don't know what the market cap is on that.
BTG is actually one of the bigger ones. They should probably get out here and do a reverse split for you because I know how much you hate it. Let's see. Of the GDX components, by market cap, we got Newmont number 1, Barrick number 2, Franco-Nevada, Agnico Eagle, AEM, Wheaton WPM. So BTG is all the way down around the 10th largest by market cap, $4.5 billion. 4.5 billion cap, 4.5 price.
All right. Well, interestingly, for this sub $5 stock, I'm looking at the options chains right now, and I'm going to open all these up. They basically, your options, if you want to buy calls, is you could buy the at the money $5 5 strike, or you have to go all the way out to 7.5, which seems a little egregious. In the options market,
open interest there in May.
And the open interest in May is 29,000 contracts, so not insignificant.
Is that the $5 calls?
Yeah, you can buy them for 10 cents.
That's how this got on our list. That was the contract they were in.
Well, there you go. I mean, there's a little lotto. I mean, but it's so short term, right? Like if you're going to play this lotto ticket, buying these May 10 calls or the May 5 strike calls for 10 cents, it's a lottery ticket. You got to nail the timing on this one, but it's cheap enough that you could throw a little scratch at it and see what happens.
And that's what these investors are doing, right? Gold has been on absolute fire. We don't know, when the next leg higher is, if it's tomorrow or next week or next month, right? So these things could expire worthless, but if they get that move in time, they could also make a lot of money, right? So probably whatever that risk was.
Well, I'll tell you, my friend, I kind of like these January 5 calls where we can buy them for probably about 60 cents. That gives us a lot of time for something to materialize, and we could get a multi-bagger on something like that at that price.
$5 calls are only 60 cents. Why does that seem so low?
Because the options market's not looking at the same charts you are, apparently.
So what, we make money on that if the thing moves like 15%? Am I doing that math right?
Well, I mean, look, think about this. I got the daily chart up on my screen right now. The high for the year going back a year is 507. So this thing would have to get to 560 before we're in the money if we paid 60 cents for those. So it would have to make new highs. Not that it can't, but that's probably what the options market's looking at. They're like, okay, well, it's got a long way to go to make yearly highs.
I mean, this thing rallied 30% just during March. So, yeah. All right. That's interesting. Listen, I like that. I think that's a very cool way to play this rally in gold. When these things go, I mean, they scream higher. So why not have a little, added on juice, a little cherry on top? Sure, own the common too, pick the leaders. But something like this, we're going to get the kind of move that we're expecting with all these bases breaking out, gold making new all-time highs. Stocks are showing, a lot of relative strength right now.
And there's a lot of open interest in those January calls, both strikes, the 5 and the 7.5 strike. A lot of open interest there. We got 92,000 open contracts for the January 7.5s. Look, I like this for kind of a lotto play, right? And we don't do a whole lot of lotto plays here, YOLO plays, but this feels like, you buy a handful of contracts, you don't risk a whole lot of money, and if you get it right, you crush it.
It's one thing to do a lotto play, but this is a lotto play in the right area, right? I mean, this is where you want your lotto play right now. One of the strongest groups. These are commodity stocks. So I could see it. I'm interested. Yep. I might put this on.
All right, let's start wrapping it up here. I think what we've arrived at here is BTG. If you're in the mood to take a lotto in the right sector at the right time, you might want to look into these January options, perhaps the 5 strike, or if you're really feeling salty, go for the 7.5. That'll get you some real leverage if you get it right, but you got to really get it right for that to work.
There too.
What's that?
Jumping interest in the 750s too.
Yeah, a lot of them. And then we also like Dell. Dell, I think, what was I looking at? I was looking at the October options in Dell. I like Dell. I like that base. The volatility is priced right. You could buy the 50 strike calls for about 210, maybe a little less if you're patient. I like that play as well. Before we sign off though, Straza, shout out to our man De La Riva in the comments section. I'm going to read out what he said to us. He said, "This is why I like your channel, guys. You're like rays of light in a sea of bearishness." Oh, how about that?
Oh, that's awesome. Yeah, I wish more people would give us some lovely comments like that. Thanks, De La Riva.
Right on.
That's it, guys. Just chime in and we'll make the show even more interactive than it already is. And
speaking of interactive, nice segue. If you're in New York City next week, come hang out with us. We'll be around. Hit us up on Twitter. He's S Straza on Twitter. I'm Options Sean on Twitter. Hit us up. Shoot us an email, info@allstarcharts.com if you want. We'll figure it out. Well, let's hang out. We love meeting people who are into what we're into. This is how we find our people.
Absolutely. Let's do it.
All right. Take care, everybody. We'll see you next time.
Peace. Bounce it,